Hi guys, this is Vich from Sol Forex. I'm back with another video, guys. A follow-up video of first video that we did, of which we caught a butterfly pattern on a daily time frame. I showed you guys how to catch harmonic pattern on a higher time frame using Fibonacci retracement. As you can see, guys, on the previous video, I showed you guys how to swing harmonic patterns, and then on the second video, I also showed you how to catch scalp trades, how to scalp using harmonic patterns. But on this one, guys, I'm gonna teach you. It's not even a teaching, it's not a lesson. This is just a follow-up on the first video, showing you guys on that butterfly pattern what transpired, or what did take place after we took that swing trade right here. But I'm gonna take you back, guys, a little bit, showing you what happened on this pattern. I'm not gonna go deep, guys. I'm just gonna show you a follow-up or what happened on this butterfly pattern. If you remember, guys, or if you can just subscribe, guys, on our channel, so that you can go back on our videos to see on the first video and the second video. This one is a part 3 of our harmonic pattern videos. This video that we're shooting today is a follow-up of a first video that we took, showing you guys how to swing trade harmonic patterns. If you remember, there we caught a butterfly pattern, which I said, guys, when the market is going up and retraces back, it always retraces on 786 when it's a butterfly pattern. When it's a crab pattern, it always go to retraces on 618. When it's a bat or a shark pattern, retraces on 50%. But I'll show you guys later on the next video how you spot different kinds of harmonic patterns. But on this video, I'm only gonna make a follow-up of what happened on the swing trade that we took on a butterfly pattern. Okay, guys, the market, you can see that it went up, retraced back, and came back on what? On 786, went up again, but never broke the previous high. It came back and went straight to what? To 127, which is our valid butterfly pattern. And as I said, guys, when it gets on D point, that's when you can get a double bottom, or rather an inverted head and shoulders, if it's a bullish harmonic pattern. But if it's a bearish harmonic pattern, that's when you can get double top or head and shoulders on top. But this one is what we call a bullish harmonic pattern. That's when I'm gonna start to draw it, guys. On the next video, I'm gonna show you how you draw these patterns. Okay, we take our triangle, guys, from this point to that one, comes back on 786, which is our B point. We take another triangle from this point, going up to C point, all the way to 127. That's where you're gonna get your patterns on 127. That's when you're gonna get your entries, guys. That's when you're gonna get your entries. You can use whatever price action or whatever you can use as confluence to show you your entries on your D points. That's when I said you can also put a counter trend line as your confluence, so that it can show you as soon as it breaks your counter trend line. That's when you can know that it's going all the way up to 38.2 and 618. And if you take this one from this point using your Fibonacci, I said it retraces where on 786, but comes back to 127. You can also draw a shade there, so that you can see your 127 or your D point very clear, guys, there. And now we're gonna check for what? For take profits. Last time I showed this video, it didn't break this counter trend line yet. I think I was somewhere around here when I showed the first video. But now this is what a follow-up of that video. But now, guys, the market went down, it came back. If you can look, if we go back to that video, guys, I said when it gets to these deep points, that's when it shows you what? Double bottom or inverted head and shoulders. When the market shot up and broke this, I was waiting for some kind of a pullback, because when the market is breaking up strong, it always gives you what? Always gives you a pullback. Maybe I was looking for something like a right hand shoulder that's gonna form here and enter again my buys. But now you can see, guys, the market went all the way up, shot straight up, all the way to our first target and what? And second target. This is our D point on the green shade right there. That's our entry. As soon as it broke this counter trend line, that's when I entered my buys. I was waiting for the market to retrace or make a pullback, rather here to form what? To form a right hand shoulder so that I can enter again more buys. But now the market chose to shoot right straight to 618, which is our what? Our second target. When the market does this, guys, more especially on a higher time frame, you must know that there was a stop hand that was involved. If you can see there, guys, it never broke our pattern because I said you either get a double bottom or what, or inverted head and shoulders. I never said the double bottom are gonna be straight. Sometimes you can get a double bottom. A second bottom is gonna break the previous high, which we call a falling W. This is what we call a what? A falling W. When the first leg goes down like this, and then you get your first leg, you get your apex right there on this point, which never broke our trend line, our counter trend line. And then it came again, fooling the sellers. This was a stop hand, guys. You can see there was also a small retracement there. There was also a small retest on that previous low, showing that it's gonna go more down, fooling the sellers. There's a lot of sellers that were trapped on this point right here. We call this a stop hand. It went down as if it's gonna go strongly down, but now we know that it's on our deep point of our harmonic pattern, and that's why it never showed us our second leg, our shoulder right here, our right hand shoulder, because as soon as you get a stop hand, that's when the market is gonna run like crazy, guys, because there's a lot of sellers that were trapped there. There's a lot of contracts that were made by the market makers. Market makers knew that there's a lot of people that were trapped, stop losses, and a lot of sellers that were trapped there. That's why it shot drastically to what? To 618. We said, guys, on our first video, our first target is what? Is 38.2. 38.2. It went straight to our first target. Our first target is 38.2. This is our first target right here. And what did it do? It went straight to what? To our second target. We call this a second target bounce. As soon as it came to our second target as our 618, it came right back because it validated the pattern. From this point, went to 38.2, which is our first target, broke through that 38.2 and went straight to where? To 618, which is our second target of our butterfly harmonic pattern. This was a good trade, guys. I took this swing straight from it took us only 1 week. This past week, that's when this pattern was validated. It went straight to the target, guys. Never hesitated, never pulled back, never retraced, never did nothing. You can see all bullish candles going up to where? To 618, which is our second target, which means, guys, this VIX 75 respects our pattern, guys. It respects our strategy, which is our harmonic pattern strategy. And you can see, guys, I also spotted a crab, what we call a deep crab pattern. If you didn't take this as a butterfly, you could have also taken it as a what? As a deep crab. I'm gonna show you guys what did I saw there. If you put your I said, guys, on the last video, you can take whatever impulse that can work for you on these impulses that are going up here. On this case, I'm taking this one. I want to show you guys that you can use whatever harmonic pattern that's gonna work best for you. From this point, I can take my triangle again, from this point to that one, to 886. As soon as it retraces on 886, our butterfly was on 786, but this one is on 886. Let me change my color there. This one is on what? Is on 886, which is what? Which is our deep crab, which is what we call a deep crab. Deep crab goes and also doesn't break the high. It forms an M type on top, then go all the way down to what? To 1.618. You can see it's shot straight and touched exactly on this point, which is our 1.618, which is a perfect deep crab right here on this deep point. I said this one was a butterfly pattern because the left hand shoulder was here. Then it fooled the sellers as if it's going down, broke drastically to 618. I was expecting some kind of a pullback here. I thought it's gonna form some kind of a inverted head and shoulders right here, left hand shoulder. This was my head. I was waiting for some kind of a pullback to show us our right hand shoulder right here and go up to 618, but everything worked out on my good, guys. It went straight to 618 because there were a lot of sellers that were trapped here thinking the market is gonna go down. As you can check that, guys, I also spotted what we call a deep crab. The market goes from this point to point A, comes back on 886, never breaks the high, comes back all the way to what? To 1.618. Also, the second target is always, our targets are always 38.2 and what? And 618. If you caught this as this deep crab, you would have also caught the first target right here, guys. First target was gonna be right where? Right here on 38.2. Let me change color for this one, for this deep crab. Let me put rather, okay, this color is also right. 38.2 was our first target right here, and 618 was also just below our butterfly pattern target, this one. So you could have caught both of these, whichever one you chose, whichever one worked better for you, which is a deep crab on this deep point, which touched perfectly right on this point, on deep point, went straight to first target, broke it, and went straight to 618, which was a valid deep crab. And the first one was a what? Was a butterfly pattern. Also went to deep point, which is our 127. Never broke it. If you go to a higher time frame, if you go to a weekly, you can see that there's only 2 candles there. It comes as a bearish candle and also break also above as a what? As a bullish candle, which tells us that it never broke deep point of a butterfly pattern. Went straight to what? To 127. As and guys, always when you get your second target, that's when you can also check what is the market doing. Okay, let me take off these shades. I want to show you something else very quickly. I want to show you something else very quickly, guys. On our current price, what is the market doing? Okay, as you can see, guys, I said this is called a falling W. You can see there's a W. I said, guys, when you see an M, a large M, or when you see a W, that's when you can see that there's a possible harmonic pattern that's gonna form right there. And if you can see on this second W, on this second leg, it broke the previous low. This is what we call a shark pattern. There's only one harmonic pattern that breaks the previous low. It's a shark pattern, or breaks the previous high if it's on top. But in this case, it's on the previous low. You can see there was a W type that formed there. But the second leg, which has a stop hunt of our deep crab and butterfly pattern, this stop hunt right here was the second leg of what is going on at the moment. That's when I took my Fibonacci retracement from this point right here all the way to this impulse right here to this point, which is our point X. Went back and went to our apex. I saw there's an apex here. An apex is a middle part of a W or a M type. When you see that middle part, that's what we call an apex. Came from this point to this one. Went straight to 50%. 50% is a bad pattern. But if it didn't break this low, it was going to be a bad pattern. But you can see now it broke this low. Went to 113. How do you see it's on 113? You take your Fibonacci retracement back to where you started, right? Okay, on top here, to where you started. You can see it went to where? To never broke 113. I'm gonna put a small shade there. It's gonna make sense later. I'm gonna put a small shade right here on 113. Let me put off my fibs again. Let me take off my fibs. It came from this point, came here, made a low, came back on 50%, broke the previous low, came back on 130, never broke the 130. You can see there's 2 candles there, bearish candle and a morning star at the middle there. In the middle, you can see there's a morning star candle there. This is our reversal pattern. You can see there's also a bullish candle. So it went and closed as a bearish candle, went straight up again and closed as a bullish candle right on top of 113, which was not broken. So you take your triangle from where you started. Okay, let me rather check our fib so that we can be accurate. From where we started there, where here to here, came back where? On 50%. Let's draw it now. From this point to 50%. Let's change our color. This is our current market, guys. This is our current market. I'm gonna show you a follow-up video of what I'm doing now, what's gonna happen later. I'll show you this is gonna work out, guys. This is gonna work out because these patterns always work. They always work. I have too much trust on these patterns, guys. So you take your second triangle from this point to 113, which you made a shade there, goes all the way to 886. 886 is your D point if it's your shark or your bet, but you can see 886 was broken. If it breaks 886, so it goes to where? To 113. There's two D points of a shark pattern. It's 886 and 113. The first one you must look for is a 886 D point, but if it breaks it, you must take it to where? To 113. So when it breaks the low here, it must break it to 113 when you pull your fibs from the bottom. But when you pull it like this, it must go, your D point must also go to 113 on top, which validates your what? Your shark pattern, guys. Which validates your shark pattern. This is our current market, guys. We spotted two patterns on the previous trade there. Spotted a butterfly pattern. We also spotted a deep crab. We spotted two patterns which validated. You can see that the market shot straight up to 38.2, which was our first target, and 618, which was our what? Our second target. Then we're spotting what now? A shark pattern. This is our D point of what was of our shark pattern, guys. This is our D point of a shark pattern. You can take it. You can take it on a lower time frame to see what is going on this C to D point. You can see there's some kind of a channel that's going up there. There's some kind of a channel that's moving all the way up. All the way up to there. You can see there's a small channel there. That's why I said, guys, if you want, you can use your counter trend line, as your confluence. You can use your counter trend line as your what? As your confluence. As soon as it breaks it below, then you know your trade is validated. You can sell this one all the way to 38.6 first target, and 38.2 first target, and 618 second target. What can also happen here, guys, you can see there's a dip. Our D point is here. Our D point is here. It's here. What also can happen, it can also go up and retest on our D point. It can also form what we call a rising M. It can form a rising M, which is breaking the previous high, which is our first leg, breaking, fooling the buyers. Our buyers are gonna look for something like a retest on top of that previous high, something like this, which gonna take them where? Which gonna take them up. But we know, guys, nothing like that is gonna happen here. What it can do, guys, it can shoot straight down like this, breaking this low, going all the way to 38.2 and 618, which is our target. Or it can go back and retest on that previous high, or it can break it a little bit, fooling the buyers, thinking that it's gonna go up. But as pattern traders, guys, we know that nothing like that is gonna happen. This trade is gonna go down. I assure you. You take it from this point when you're checking your take profit from the previous one all the way up to D point. We said our target is what? Is 38.2. This is our first target right here, guys. 38.2. Second target is what? 618. 0.618 is our second target. This is what's gonna happen, guys. Exactly as I'm saying. I'm gonna do a follow-up video, guys, showing you what's gonna take place. If you can go to your platform, to your VIX 75, you can see that's where you are currently. I'm not doing something that happened last month. No, guys, this is our current market. That's what I'm telling you now. This is not a signal, guys. Don't misunderstand me. This is not a signal. I'm just showing you a current market of our strategy, what's gonna take place as harmonic pattern traders. Subscribe, guys, on the button below to follow our channel, to follow our videos, because our channel is gonna be flooded with videos from now on, guys. This is our third video showing you a follow-up of a first video that I shot, showing you these patterns on a daily time frame, showing you harmonic patterns. This is a butterfly pattern, stroke deep crab pattern. It validated. You can see it shot straight up to our target, which shows you, guys, this this strategy works, guys. It works. This is our current market now. I'm showing you what a shark pattern that's going down to. Let me check what's the price. It's going down to 70 50 41.2415. Mark my words, guys. This is gonna work. This is gonna play out. Mark my words, guys. Guys, please subscribe on the button below to follow us. Sol Forex. This is Vich from Sol Forex, guys. Please subscribe to get notifications for the next videos that are coming on harmonic patterns. Guys, I'm out. Thank you.